Hello, everyone. Welcome to the Income Masters channel. It is August 13th, 12:30 p.m. Eastern. Here with Dave Durham, and my name is Emily Norris with Traders Reserve. Today's tactical session will be recorded and we'll post a replay to the platform. If you have any questions, you can pop those in the chat box. We'll get to those once Dave's wrapped up with his presentation. With that, I'll let you take it away, Dave.
All right, thank you, Emily. We're going to do our deeper dive into tactics as a stock scan identifier checklist, basically, and what I call the hunt for high implied volatility trades. This is we'll touch the surface of this. There's so much you can do with stock scans, and you can go so many different ways with scanning for stocks. But I think we'll get through a process that I use, at least in most of the time, and then we'll be able to go out live and look at a little bit of that on Thinkorswim, just what you could do yourself. Some of you are probably already familiar with the stock scans on Thinkorswim. If so, that's great. You probably have been able to use that yourself. I use different versions of it and constantly looking for new ways to improve that. So just a heads up, new trades today or no adjustments. Everything in the portfolio is fine in terms of doing something live here. We probably will have a couple alerts after this session, but no. If we can keep your questions to the presentation, we'll be sure to look at any of the positions that need adjusting again. I mean, I've looked at them before we got on here as well. Again, we're back tomorrow also with live trading and our trade adjustment session. So that's where we're going to be doing a lot of our adjustments as well, if not live for that. Okay, today's session, basically the hunt for high implied volatility trade stocks. We're going to walk through the different factors, the different parts that make up sort of putting together a trade scan, sort of how that works there. So the factors, the steps, and then we'll go out and look live. We'll look at some scan examples I've done, as well as a live scan to go through as well. So you get to see all of that purpose there. The scans, let me just start off with this. Basically scans for, we scan looking for stocks to sell options against. That's basically our goal. Is not to buy an option or even to buy a stock and own a stock. Most brokers have some variation of an option trade scan. I know the main brokers, Thinkorswim / Schwab, Fidelity, Tasty Trade, Interactive Brokers, all have those that you can scan at, even E-Trade that Jeff Wood uses sometimes. You can also carry initial broker scan beyond to a private data services. There's other sites out there that can help you with stock scanning as well. I'll just cover a couple of those a little later. And just a caveat here, there's no secret sauce. Trade scans are a combination of testing, experience, and basically trusting what you're seeing. So there's no magic bullet here that, wow, if I could just get the perfect trade scan, I could come up with a winning trade every time. If you can do that, let us know. We'll be happy to buy into that. All right, so the factors that go into setting up a trade scan. First, the obvious one. Well, this is maybe not obvious, but it's, I basically say we want stocks above $30 and above. You could set it wherever you want to set it. You could set it at $20 and above. I look at $30, to $50, and 30 is kind of the minimum. And obviously, we're trading anything from $50 to $1,000. The usual, we have spread trades in the $100 to $900 range, and cash secured puts in $40 to $120. But if you want to keep out the $5, $2 over the counter type stocks, you can put that into your scan stock price. Obviously, they need to have options. I have, you can start that by sorting out actually weekly options, is what I keep it at right now. Sometimes I'll allow the monthly options to come in. But I had somebody about a year ago, a couple trade ideas for the scan, but they didn't have options. So they may have been a good stock to own, but unless you've got options you can trade, they don't fit into our program. The stock size and liquidity, we're not getting into actually option volume like we do with the trade setup itself. meaning we're not looking at open interest in contracts, but we're looking at shares traded in that stock, generally 1 million shares. Now, it's not a hard and fast rule. I've gone below 1 million. And there's some new issue stocks that are out that come up and jump up pretty quickly in their first year that may not be trading 1 million shares of volume. So but it's a starting point to start there. So again, volume, and you can also set, if you want to do market cap's a little different because it's not really impacting what's traded or what might be traded on the option exchange. And then we start looking for implied volatility. And I like implied volatility rank, which compares the highest and lowest IV over a time period, usually 1 year. That's the most common IVR. And but you hear the term implied volatility percentile, IVP, and that's also a number that comes up on the Thinkorswim scans. And that's a percentage of days in a chosen period where the IV was lower than it is now. It measures how often the current IV has been exceeded in the past. So these are two ranks that they're basically trying to smooth out implied volatility. We know we have high implied volatility, just regular volatility when we hit, for example, it's the 2 or 3 days before earnings. So implied volatility over 1 day before earnings or 2 days is always very high. What we're trying to do with these either the IVR or the IVP is to smooth it out, and that'll help us when we're trying to evaluate a stock potential to trade over time. Now, in reality, the IVR and the IVP at 1 year measure come up with that approximately the same number. I mean, so it's really, you can use the implied volatility percentile on Thinkorswim's scan as almost the implied volatility rank. I rarely have seen a variation that's more than one point. In fact, I don't think it's been a while since I've seen that. So we can scan for high implied volatility rank with the IVP on Thinkorswim. And obviously, we talked about this. If we can get a 30 to 40 or 30 and above, that leads to rich option premiums, but that doesn't always happen in this environment. The VIX, as of today, has been at low 15, around 1450. So we are in a low volatility environment. And just to prove it, at 11:30 today, I checked on the SPY IVR and the SPY IV percentile, and you can see they're essentially the same. They're very low, by the way. That tells you how much bullishness is in the market right now, because that's as low as I've seen the implied volatility rank in a SPY or the implied volatility percentile. But again, that's when we use those numbers interchangeably. I know they're not the exact measurement, but they essentially come up at the same number level. So that's why a lot of people use it that way. It saves time trying to recalculate it on your own. And a lot of times we look for applied volatility that's higher than historical volatility. So that means an option is valued higher for some reason right now than the historical pattern that goes on. So high IIV means there's a higher premium, but that may be higher relative to risk, and it can lead to elevated premiums and potential for volatility crush. Again, the most common example of this is probably leading into an earnings report. Earnings report volatility builds up, IVR builds up, IVP. And then the day after earnings, the IVR comes down, the applied volatility leaks out because the earnings report comes out. And if it's positive or it's even just average, there's no reason for the bets sort of come off the table, and its stock returns is sort of a normal level. Well, we like that as option sellers because we want to sell high, we want to sell and collect premium high, and then buy back low, or actually exit low. So that's the thing we look at in one of the scans. I look for high IV over HV as a trigger there. It can be other things than earnings. You could have a potential for merger and acquisition, a financial or a legal ruling that's coming up, federal regulations, also FDA approvals on drugs or drug trials. So lots of reasons why you could have a high IV over HV, and eventually that leads to a good outcome for option sellers. The other thing you can, and I do, we include avoiding earnings when we're doing these scans because in effect, why lead yourself right into earnings unless you have an intention to trade earnings? So the earnings obviously drive higher IV. So if I do a scan with high IV and I don't put in there omit the earnings the next 25 or 30 days, I get a bunch of stocks. It looks great. They got a high IV and a lot of volatility, and then you turn around, they've got earnings in a week. They got earnings in 10 days. So basically, we admit earnings on general for the next 30 days. There's exceptions, and I'll come back to that as well. And there are times maybe when you want to trade earnings. So you're actually looking for stocks that are about ready to report earnings, and so you can put that into your search criteria as well. But ultimately, what you're doing is trying to come up with a list of stocks that are going to pull up in the broker screen. And then you're going to start to say, okay, which ones look interesting and which ones could I put into the option trade setup checklist, basically our setup. And that little process I used that we went over last week, which was walking down through the stock to see, does it meet enough criteria? Am I bullish on the stock? What are the days to expirations I'm going to set up? What's the liquidity in that expiration? So that's how these two tie together. You're using the stock scan to get a list of stocks that can be then sort of narrowed down to your trades and run through the trade setup checklist. So there's a couple of IV scan setups for Thinkorswim I'm going to go over. I'll actually go out live. This is kind of my easy one that I kind of go out. It's called the high IVP scan. So looking for high implied volatility percentile. Basically, I got a stock here at $30 or above. I got volume shares at 1 million above. I've got the IV percentile 30 to 97%, could be 100%. And I set it up so it does not have earnings in the next, usually it's at 30 days. Right now that most of the earnings have died down, I pull it back to 25 or 24 days. Then you just hit the scan button. And so go out and look at that scan and will pop a list of stocks. I have another one where it's a similar approach, but I'm looking for basically implied volatility over HV. So it's my IV over HV scan option. Is the implied volatility at least 5% greater than historical volatility? So I'm looking for those maybe hidden gems that turn out to be, yeah, there's a reason the implied volatility is over historical volatility, and I can use that to basically find a stock to trade. I have some of the other same setups, a minimum of implied volatility 25%, and I don't want to have earnings in the next 25 days. And again, I can hit scan with that. So that is the a more common. Those are some of the two common scans. I'm going to go out and look at both of those live, and sometimes they'll overlap with the stocks that are coming up in the scans, and so sometimes I can just jump in and do the high IV and get those as well. Now there's other ways. There's other scans that are pre-chosen that are standard setups on standard scans on Thinkorswim. You could have percentage change and gains, closing mini sector, gap down, gap up. I sometimes play with the gap ups and the gap downs. Market maker move stocks. There's new yearly highs, new yearly lows. There's lots of different, there's some other public listings on Thinkorswim. I'll show those to you. I play around with them a little bit. I mean, it's, when you do something like, well, scheduled earnings in the next 5 days. Yeah, I mean, generally we know what stocks are coming up with earnings, but you could always use that if you want to do an upcoming or an earnings trade or trade before an earnings trade. So Thinkorswim offers a lot of those. I know there's some standard scans on Fidelity that I've used and on E-Trade as well. So those are some of the things that come up on that. There's also, well, here's some of the stocks that I uncovered recently. This is a scan I did yesterday on some companies that I kind of put the criterion using. I think it was the percentage change gainers, and come up with some of these stocks, a Bitcoin miner, Bitcoin block technology company, BMNR, Nebius Group, which is a Dutch AI integration, NuScale, small power company, SMR, MP Materials, rare earth material miner, Kratos Defense and Security. So whether you've heard some of these are some of the more unusual names I come up with. For our program, if I come up with something like this, I will trade it first in a test account I have just to see how it trades before I elevate it into our trading, because I don't want to get into something that's get us into something that maybe I haven't got a feel for, or at least know how it trades, or it's possible it doesn't have enough volume, although these companies generally have enough volume at the monthlies or right around the monthly options as well. Thinkorswim also offers an unusual scan, and I'll take a look at it when we go out there, but they have something called both an option hacker and spread hacker. And I fool around mostly with the spread hacker, where you can call up verticals, diagonals, calendars, butterflies. This really takes you right, rather than to the stock, it takes you right up to a potential trade setup. It gives you both the vertical, you can see here, buy, sell, and I'll go out long. Here's the meta, September 12th, and then it's going to give you the ticker, it's going to give you the strikes and a credit. What I found with most of these, because what it happens is if you look at this pre-market or aftermarket, it can be very exciting, because you can see, wow, there's a 3 wide, it's $1.50 credit, and then you go on when the market opens and it's really 15 cents. And then you can sort of go down a rabbit hole here. You can do some sorting with it, but it can have you looking, and you can set this up for verticals and diagonals and calendars, butterflies, and iron condors. So there's lots of ways to use it, but you can also spend a lot of time and not really come up with a trade out of this. I've come up with very few directed trade setups using this, and I've done most of this. I've done in my test accounts just to see how this plays out, because normally when I find either the strike and the expiration date, either some cases it may not have the volume to hold for us to trade it, or I'm really unfamiliar with the ticker, and that's another thing that you don't get background on the ticker or any idea what you're looking at there. So, but there's some times when I'll fool around with that and try to come up with something there as well. I mentioned before, you can also go out to third-party private stock scanning services. So the FinViz is a popular one. We use FinViz at Traders Reserve for stock scans. John Hutchinson and Jeff Wood and our team uses them from time to time just to do regular stock scans. It's for trading stocks more, or for buying and selling stocks. Bar chart's one that Jeff uses sometimes. I used to use this, don't really find it that helpful. Where if he finds some nut names on Thinkorswim, he tries to boil them down further using the bar chart. And there's others. I mean, you could probably name 10 others that are out there. So I think it's certainly a one. You can either start there, or you can actually take what you get off Thinkorswim and run these through these third party, saying, look, I've got 5 names that look interesting. Can I drill down a little further that Thinkorswim doesn't give me? So I just want to make sure you're aware of that before we, as we go through this. So before we go out live, I'll just sort of summarize up here. These stock scans are helpful to narrow down a watch or prospect list. So I have a prospect list, a bunch of names for income masters. That prospect list is 150 tickers. I mean, it changes, and pretty much every week I'm adding or taking off tickers. So I can use that. I can use scans on that list to see what looks good from there. I can also go outside that list, which I do also. I find the scans particularly valuable in a higher volatility market. So when the VIX was at 20, 21, 22, it was a little easier these scans were a little more relevant to particularly some of the stocks we're trading. We're finding enough liquidity in the options of the stocks we're trading. So when you're in a really low volatility environment, you're going to get low IVs, but it's generally either going to be earnings or something that you've got to check into on that. Remember, we're looking at these for stocks to sell options against. We're not just looking for an investment. And again, many brokers have the same variation, but you can also go on to a private third-party service. And again, I'll remind you, I think this is pretty clear for everybody, there's just no secret sauce. The trade scans are a combination of, using them, testing them, experiencing them, and eventually trusting or finding out what you can trust about them as well. So let me go out for just go to my stock screen or go to my scan screen on Thinkorswim. And my Thinkorswim's frozen. Come on, Thinkorswim. Because I've been on the slide all the time here. Right, let me stop share. Okay. Yeah, here we go. Back up and call up. All right, here's what I showed you, the screenshot of the high IVP scan. It's the last is $30. That's the last price. It's $30. It could be 28 right now, or 28 by the time we get out there, but it's $30, generally million shares, million contracts, million shares. IV between 25 and 90%, and no earnings in the next 25 days. And again, when we head into earnings, I'm usually putting 30 days a year. So I keep a month out so that we can avoid some stocks, but we keep 25. And then I hit the sort. You can see here showing 30 of 30. So if you've done this before, you're pretty familiar. I show up to 50 at a time. You can show up to 200 at a time. But 30 is good. It means I'm getting into the areas. And then what I'm looking for is the IV percentile. I've got ranked by IV percentile. So I'm sorted out. You can sort these by volume. You can sort this by price. You can sort it by sector. I want to see one of the ones. Here's the iShares Bitcoin, which we're actually in a position with 67, 68% IV. In phase, which we've wanted to trade as a short position, actually there. FedEx, Lennar. So these are fairly big. Here's MP. This is a stock that's in the rare earths area. So that popped up in the list before. Exact Sciences in the medical area for solar. We've traded for solar. CRISPR Therapeutics, Mondelez, Southwest. And so you can see some of the stocks that come in here. And so what I generally do is I'm going to cut off here around 30. Now that I've got these stocks. And generally, then I know the ones that are kind of going to grab my interest that if I'm not in a position. Lennar looks interesting. MP looks interesting. It's First Solar as a call spread looks potentially interesting. We traded United, and I prefer United, but we can look at Southwest. Novo also, along with Lilly, and then Lemonade, a financial company. So you can kind of come down and sort through those with that scan there. So that's what shows up today. And what I'll probably do is on Mondays when we do our weekly setup there for the week, go out to the live trade scan because this does change day to day. In some cases, not as much, but as long as you're meeting earnings, even Lennar is not till 9/18, so it's past the 25-day mark. That the other scans. So if I load in here, I'll load in my IV over. And again here, I scan in 80. So I got 84 stocks. So now I get because I'm looking for a different kind of actually implied volatility 50%. That's okay. This and I can see here, I average volume is over, that's up 2 million. So it's probably, it's a different set of scan I set up that on this one. But I'll leave it here right now because we're going to go through these numbers here. And it doesn't have any earnings in the next 15. This scan always resets to 15. So I'd probably go back and take this to 25. That'll narrow down the numbers here on this scan 71. I bet shows up again. I get British American Tobacco. Inface shows up again. FedEx MP. And then so then I start looking through again what what looks interesting here. This is a different list. Obviously, you've got volume here of shares that are lower than the others. And that's sometimes I do. I sometimes will lower the volume of shares to pick up stocks. Now, generally a REIT, I can rather REIT. And here's the other thing I can do up here in the scan. In fact, this is what I do. I can go here to public. So I've got all scanned in all stocks. This is the same IV over HV, but let's limit it to only weekly. So I can limit the weekly options, hit the scan. Now I'm down to 39. So that's a little better. That's why then it pops out those REITs. Got to do bad. Sorry about that. Now Alphabet pops up here. Both the GOGL. We've got Net, Cloudflare, and Robinhood. And then I can even do further if I want. I can omit, exclude, and OTC stocks. And I don't think I have. I don't see any OTC right now. Yeah, so no OTC came up. So that's another way of keeping out kind of the, if you want to call it, the riffraff. So now to me, this is interesting. iShares were in already, but there's Alphabet. So that might be something we look at. It's only got an IV of 25%. So it's not exactly killing it there. Implied volatility, the actual today's implied volatility is higher at 33, but not getting it there. Cloudflare also basically at 20, and even Robinhood, which has been volatile lately, down 5% today, is only a 2%. But they're names now that I can start incorporating into my checklist to try to go through and begin to see what looks good there. Let me just take you out to this spread hacker, because this was what I was showing you a screenshot of. So you can put in here vertical, butterfly, calendar, or double diagonal, whatever you want to do. And then, you've got delta 16, probability of profit at 80%, max profit 50. The underlying price, I could lower the underlying price to a minimum. I was there twice, should have taken out. I'm keeping this at 50, but we could lower it down to 30, and I scan it. And so here's Royal Caribbean for August 22nd. That's a week and plus out. The 272 put. I don't know why it's catching the delta here for the 276. So 272 put. My bet is Royal Caribbean at the 22nd. 22. What was that? Sorry. 272. Yeah, and we're sitting here at a 8 delta. I don't think you're gonna get. No, take that back. It's 90 cents. Now, here's one of the problems: the 22nd of August for Royal Caribbean. For us, it doesn't really look like it even has 500 open interest. Well, it might have 500 interest, but not even. And I guess it does have 100 contracts traded. So it's still a little iffy for us to come in and trade at the unbelievable 8 delta level and a bid-ask spread of a penny to $1.12. So that's why when I go into this scan here, you've really got to be careful about this, because and be able to sort of try to narrow it down. Here's the GEV. This is the other GEV industrial company that's got the 72, 725 call. So this is a call spread. So for 22nd, let's do GE. No, sorry, not GE, GEV. And that span was 722.50, 725. So 722. Wow, this is going to be. Yeah, so this scan is not now. I'm probably not setting this up totally correct, but again, we're getting wide bid-ask spreads here at 722. In fact, we're not getting any bid-ask spreads. We're getting no volume. So there's probably a better way of sorting this. I've gone through this and played with this a little bit. If you got a minus 16 delta, so it's probably going to be lower than a max delta of 12 if I had that. But 14. and it's still coming up with the same number. So you're not always finding trades with this kind of scan, and then you can just spend a lot of time digging through here and wasting a lot of time as well. So these scans, we come back to the regular stock hacker is where we generally are looking again for stocks to try to trade and not going after necessarily setups that way. We're looking for the tickers, then we can run them through the setups at that point. That's my preferred way there. So that's an overview of this. Just about now, half hour. Emily, let's look at questions.
Okay, Dave, I don't think we have any questions pertaining to your scan. Just I let people know in the chat, we will be managing the XOM position, ExxonMobil, after the session via alert. Some people have received notices from their brokerage about the dividends, but we do plan on adjusting that today.
Yeah. Yep.
And
We will adjust that. Okay, we'll be adjusting other position. I mean, tomorrow we do have our adjustment in trading sessions. We're back to new trades. Let me just finish up a reminder with this. We will post this the trucks, what I went over, the slides we posted with the video, but I've got a PDF just like we did with the trade setup checklist. We'll post that later today. And tomorrow we'll be back. Well, actually, reminder again, Income Madness, Monday through Thursday next week. That's the 18th through the 21st at 12 p.m. And then we're back tomorrow at 12:30 for live trading and trade adjustments. So have a good rest of the day.
all right, thanks, Dave. Thanks everyone for joining us. We did record this session and we'll post a replay to the platform along with Dave's slides and stock scan identifier document. We'll see you tomorrow at 12:30 p.m. Eastern for our next live session. And between now and then, keep an eye on your inbox for alerts managing open positions. Thanks and have a good day trading.